Welcome in this video. Which way will Xcn coin go? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. A careful look at the chart reveals an upward curvilinear structure that is formed by price action in a very aesthetic and orderly manner. This type of curve is often referred to in technical analysis as a rising curve, or a parabolic bullish pattern. Traders follow this pattern with interest, as it usually represents steady buying pressure and positive market sentiment. It shows that over time the price is gaining upward momentum, but not in an overly fast or aggressive manner, but in a more healthy, controlled, and balanced way. The shape of the curve indicates that buyers are constantly in the market, and that declines are short-lived. Therefore, the continued movement of the price along this curve creates a very valuable technical structure that confirms the bullish strength. Looking at the current price action, it can be observed that the price is trying to move forward by periodically touching this ascending curve. These contacts indicate that the price is referencing this curve, and market participants are building their trading strategies around this structure. In particular, the fact that this curve works as support on every pullback shows that the price allows limited declines and then recovers and continues its upward journey. This proves that the market is in a strong bullish trend. For traders, such structures are very valuable because the price's fidelity to this curve provides important information about the stability and health of the trend. Every contact along the curve can be considered a potential buying opportunity. As long as the price doesn't break away from this curve, there is a high probability that the uptrend will remain intact. This allows traders to confidently hedge their positions and develop new buying strategies. The continuity of the curve can be interpreted as a reflection of confidence and positive perception in the market. The fact that the price sticks to this ascending curve even during periods of market volatility shows that buyers have faith in the market and are strongly engaged. Such behavior is characteristic of bull markets. Each contact with the curve can be considered as a kind of breathing space, with short pauses to recharge and prepare for the next upward move. These regular movements provide investors with a high level of confidence and show that the market is moving in a planned and healthy structure, not just in knee-jerk reactions. Another important aspect of this structure is its psychological impact. When investors see such curves, they think that the rise is not a coincidence, but the result of deliberate buying and confidence. This psychological state creates a positive wave in the market, which in turn encourages more traders to open buy positions. Thus, the price is supported both technically and psychologically along the curve. The more frequent the contacts to the curve and the price reacts and rises after these contacts, the more investors believe in the bullish scenario. Moreover, this curve works not only as a trend line but also as a dynamic support zone. Every time the price touches this curve, it turns up again, indicating that this level is an important support line and the market has adopted it as a reference point. In such cases, if the price continues without breaking the curve, it confirms the strength and continuity of the trend. Not breaking the curve is very valuable for the price to maintain its upward momentum. Another noteworthy thing about ascending curves is that these structures usually reach strong and large price targets. At a certain point, the price, which has been moving steadily along the curve, may increase its momentum and enter a steep upward phase called parabolic bullishness. At this stage, the price can experience very significant rises in a short period of time. This regular progression along the curve is considered a prelude to these big moves. But we can't decide the analysis by the curve alone. Let's look at the other metrics. Stay tuned. Careful examination of the chart clearly shows that the price is currently positioned in a very critical zone. This area is considered an important resistance line in terms of technical analysis. Resistance zones are levels that have slowed or temporarily halted the price's progress in the past. And at these levels, sellers are expected to become more active, balanced, or superior to buyers. However, in the current outlook, the market's willingness to move with momentum and the decisive approach of the price to these levels creates a very promising atmosphere for investors. This resistance level can also be considered as a psychological barrier, because the price may have faced selling pressure when it reached this level before. But now the situation is a bit different. The increased interest from market participants suggests that the bullish motivation is strengthening. As the price approaches the resistance level, it now has the potential to face strong buying interest rather than sellers. This suggests that if the price manages to break above this resistance, there is the possibility of not only a short-term bounce, but also the start of a broader uptrend. Resistance zones act as key thresholds in technical analysis. Once the price crosses this threshold, The area where sellers were previously active can now become an area where buyers are showing strength. In other words, this is a strong structure that can turn from resistance to support. This transformation is technically considered a very positive signal, because now the price has left this level behind, which it has had difficulty with in the past, and has entered a new bullish phase. Especially in the case of persistence above the resistance level, both momentum and investor confidence increase significantly. This allows for bigger targets to be discussed. The process of testing the resistance level usually takes several attempts. During these attempts, volume growth and momentum indicators are also carefully monitored. In the current situation, the steady approach of the price to this level is an important indicator that increases the probability of breaking this resistance point. In addition, a breakout at this level is called a breakout in technical analysis and usually heralds strong moves. If this breakout is supported by volume, it is possible for the price to reach much higher levels quickly. This zone, which traders watch carefully, can also represent the completion level of patterns. For example, structures such as a bowl pattern, a head and shoulders, or a W pattern are completed above this resistance level, and then target measurements come into play. In this respect, this resistance line is not only a short-term hurdle, but it can also determine the path of the price in the broader term. At the moment, the determination of the price as it approaches this resistance zone suggests that the market is gathering the necessary strength to break this level. The motivation of buyers has increased, and the volume data supports that there is a serious demand behind this rise. If the price breaks above the resistance level and holds there, it would be a clear bullish signal for technical analysts. This breakout could cause a reshaping of the trend in the market, and traders can start evaluating new target zones. In conclusion, this resistance level above the current chart structure is a critical point where the balance of power in the market could be re-established. The potential for the price to push this level and break it to the upside increases investors' bullish expectations and reinforces confidence in the market. Therefore, if the price breaks through this resistance level, there is a strong possibility that a strong upward trend will begin in the coming period. With technical indicators also supporting this breakout, the market's capacity to move upwards will increase. On the chart, we can see that the MACD indicator has recently made a bearish crossover. In technical analysis, this type of crossover can often indicate that short-term momentum is weakening and the market is trending for a pullback or sideways movement for a while. However, this should not be taken as a completely negative signal. This is because the fundamental nature of the MACD not only indicates existing trends, but also pre-signals new ones. Therefore, this bearish crossover may actually be a preparatory phase and can be interpreted as the market's process of regaining strength. The MACD indicator has two distinct lines. One is the short-term average line, which reacts faster, and the other is the long-term average line, which moves slower. Although these two lines have crossed each other downwards, it is understood that the permanence of this intersection is not very strong when the current price movements are analyzed. The fact that the price is still trying to hold on to the support zones shows that buyers are still active in the market and that there is the potential to create a new momentum at any moment. In particular, if prices stabilize at these levels and new buying waves form, it will put upward pressure on the MACD lines. This means that the short-term average could signal a move back above the long-term average. If this upside crossover occurs, this is considered a very strong bullish signal in technical analysis. We should wait for the crossover. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.